Lecture 2 looks at the financial position and the statements of the financial position that we will be preparing for our accounts. The first thing we want to talk about is, what do the users want to know about your financial position? So what is it that we need to present? In study unit 1 and in the background, I said to you, we're going to make very sure that we're comfortable with the fact that what we are doing as accountants is that we're creating financial information and then we're presenting it to other people. Now, you can't create financial information and present it if you don't know what it is you're looking at and what it is that those people who are looking at the reports want to see, one. And two, we know, and I've said before, that our financials and our accounts are governed by IFRS, your International Financial Reporting Standard, which gives us framework and formats. You're going to have to know what they are. So let's take a look at what it is, first of all, practically, that the users may want to know about your financial position. And then we'll take a look at how we structure this, how we put it in the report, and whether or not we need to clean up any little technicalities. I've put a little infographic in your study units in the build to make sure that you're comfortable and that you can visualize how the business works, that you understand the inflows and the outflows of money. And let's make this as practical as possible. Before we get into definitions, before we get into the technical stuff, let's make this something that you can really see. So when we look at the financial position information, when we start, we look at two things. Where did the money come from, and where did the money go? Where's the money coming in and where's the money coming out? If I'm looking at your business, if I am trying to invest in your company, or if I want to give you a loan, I want to know where the money is coming from that you're busy running your business with. I want to know how you funded it. If you take a look at that infographic, you bought material, you bought raw material to produce your product. Where did the money come from? Did you put it in yourself? Did you contribute, or did you invest the money yourself? Or did you get a loan from the bank? Did you go to the bank and say, I've got a fantastic business idea, give me 100,000 Rand, I'm going to go buy material, I'm going to go buy machinery, I'm going to go pay wages, and I want to run this business. So where did you get the money from? The loans, the finance, did you get credit? Did the owners contribute money? These are, remember, our financial statement elements. If we got loans, finance, credit, in other words, we created obligations. We got funding from people who expect us to pay them back. Those are our liabilities. If the owners are contributing and investing money as part of their shareholding in terms of their equity, then that is equity, the owner's share in the business. Keep in mind that the owner could give the business a loan. That's not the same thing because he wants his money back. But if the owner invests the money in the business and says, I want part of the profits, I want my share of the business, that will be equity. Again, we're going to go into definitions later. So when we look at your financial position, I want to start off by asking, where did the money come from for you to start your business? Where is the money coming from? What did you do with the money that came in? If your investor, or if the owner invested 100,000 Rand in the business to start from, what did you do with that? Did you go buy machinery? Did you go buy inventory? What did you do with that money? Did you purchase machines? Did you keep it in the bank? And the point about this is making sure that we always keep track of where the money is coming from and where the money is going. Money doesn't come from nowhere. We know that. And we also know that it shouldn't just disappear. So when we take a look at financial position information, it leads us to ask ourselves how we actually record this. As I've said, money doesn't just come from nowhere. It doesn't just fall from the sky. I have to either get it from my investors, my owners, or I'm going to have to get it from financiers. I'm going to have to get funded for them. So where does it come from? I need you to record that. You need to keep track of where the money comes from and where it goes. It's very easy for money to disappear. I need to know exactly where it went. Just because you spend it doesn't mean that it disappears. What did you spend it on? So we need to record the outflows of the business. We need to record the inflows of the business. Where did the money come from and where did it go to? Did you buy other assets? Did you buy inventory? Did you buy stationery, pens, pencils, whatever the case is? Our accounting equation says we must make these two balance. We've got to make sure that we can account for that. And when we take a look at our basic accounting equation, we can see that we try and keep track and balance out where the money's come from and where it's going.